Well, it's a very disappointing set coming in from Infosys this time around, a miss on all parameters, and starting from the top line itself, wherein the constant currency growth came in at just 1.2%, and to put it in context, we were expecting a growth of over 3% in terms of constant currency. Even if you look at the margin picture, it was very disappointing with a slip of around 300 basis points sequentially for the number to come in at 21.5%. We were working with a number of 23% thereabouts. In terms of the other internals, the TCV deal pipeline also was a tad bit muted. We saw a number of $2.3 billion, and that was slightly lower than what the street was expecting. The management did point out that there was seasonality and lower utilizations that impacted the number, but my guess is this will not be taken well by the street. The only saving grace, if at all, was the FY23 guidance. They are talking about a growth of 13 to 15% in FY23. And this compares to the street expectation of 12 to 14%. However, you need to put it in context that the base has now turned lower given the big miss that we have seen in Q4, and perhaps that is why the guidance will be taken with a pinch of salt. In terms of the margins, they are expecting a margin band of 21 to 23%, and this too is towards the lower end of the expectation of the street, which was expecting an uptick of around 22 to 24%. Overall, in terms of the internals, it was weakness all across. BFSI sector was flat. We saw a decline in the retail sector in quarter-on-quarter terms, and even if you look at the geographies, US, which was very strong for TCS, was pretty much flat for Infosys, and my guess is this will not be taken well by the street. Overall, the attrition has also jumped to 27.7%. Given the fact the stock trades at expensive valuation of 21.9 times forward earnings, my guess is that the stock will react quite negatively to this disappointing set of numbers.